Euro dollar. So we've seen the euro bid up in recent trade, though overall the price action is nothing to get too excited about, with the market still trading below 110.60, which is a critical potential lower top. Overall, the market remains confined to a broader downtrend, and so a break back above 110.60 would be required to take the immediate pressure off the downside. Inability to take out 110.60 keeps the focus on the downside, with a lower top sought out ahead of the next downside extension back below 107.11 and towards the December 2015 low at 105.21 further down. So pay attention to 110.60 today, and so long as we hold below this level on a close basis, the risk remains tilted to the downside. Sterling dollar. So cable continues with its collapse to fresh multi-year lows, now at the lowest level seen since March 2009, and the market has traded down towards the 141 handle to about 141.30 thus far. At this point, we can't rule out the possibility for deeper setbacks to test psychological barriers at 140, though again, technical studies are extremely oversold on a daily basis, and the market is begging now for some form of a correction. We would, however, need to see a break back below Tuesday's high, which comes in at 143.40, to strengthen this outlook and confirm the onset of a potential correction. Dollar yen. So dollar yen remains pressure to the downside, and the market has been seeing some bearish consolidation over the past several sessions before breaking lower in Asia trade on Wednesday. At this point, the focus is on a retest and break of the critical August low at 116.30, with a drop below to then expose medium-term downside potentially back towards the 112 to 113 area. At this point, any rallies should continue to be very well capped, while only back above 118.84 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues with its impressive but slow recovery as the market now closes in on a retest of the key September peak at 110.50. A break above 110.50 would be a significant development and would open the door for the next major upside extension in Euro Swiss towards the 115 area. At this point, any setback should continue to be very well supported, with only a break back below 107.15 to compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie continues to be pressured to the downside, with the market trading just off recent multi-year lows, the lowest level since March 2009 at 68.27 set this past Friday. At this point, look for a potential break below this level to open the next major downside extension, which could expose, if this weakness continues, a move all the way back down towards lows that were seen back in 2009, down towards the 60 handle. At this point, any rally should be very well capped, with only a break back above the 71 area, 72 area to take the immediate pressure off the downside. Dollar CAD. So dollar CAD continues with its surge. This parabolic price action has been pretty insane at this point, with the market reaching its highest level since April of 2013 and trading up well above 145 into the 146s thus far, and now approaching psychological barriers at 150. Again, technical studies here are highly overbought, and so there is risk for some form of a meaningful pullback in the days ahead. But at this point, we would need to see a break and close back below recent lows around 144.30 to trigger the onset of a correction and open the door for an acceleration of declines, potentially back down towards previous resistance at 140. Again, the market, while it holds above that recent low that we saw at 144.30, does suggest that we could see additional upside through 147 in the sessions ahead. Kiwi dollar. So Kiwi is now establishing below previous support in the 64.30 area and is now targeting a potential retest of the critical low that we saw back in August of 2015, down around 61.30, which was the lowest level seen since May 2009. At this point, any rallies should continue to be very well capped in this market back towards the 66 handle, while ultimately only back above 69 would compromise the bearish structure for Kiwi dollar. SPX 500. So the S&P 500 is now within a stone's throw of that critical August flash crash low at 1834, with a break below and a close below to open the door for a fresh downside extension, exposing a move well below 1800. At this point, any rallies should continue to be very well capped below some previous support now turning resistance at 1993, while only back above this level would take the immediate pressure off the downside. Gold. So gold continues to show the formation of a potential meaningful base, with the market now being well supported on its most recent dip towards 1070. A higher low is now sought out around 1070, which will be confirmed on a break back above recent highs around the 1112 area, opening the next major upside extension towards critical medium-term resistance at 1192 further up. Only a close back below 1170 would compromise the newly adopted recovery outlook for the gold market.